Hello.
Hey everyone, Douglas here, and welcome back to the MMT Macro Trader live stream. We're back at it for another exciting week of all things
All right.
MMT. We're back at it. What's going on, Bijou?
All things MMT. Yes. Everything's good here. Women's soccer football World Cup here happening.
Oh yeah.
Lots of talent and getting some writing done this week. Not much programming, but that is to come. Yeah, I've been a bit passive, but really enjoying your conversations, and we shall see. Hopefully you'll be able to talk about some of that stuff that's been going on tonight.
Yes.
And I enjoyed your market recap. That was
ooh, the super secret shadow stealth liquidity.
Geeky entertainment in a good way. Yeah, I know. I'm kind of looking forward to you explaining that to the crew tonight.
Yeah. Well, welcome, crew. We will give a second for everyone to kind of stroll on in here, say hi, and all that good stuff, and then we'll talk markets for a quick second. We've seen essentially 2 weeks straight now of selling, so I do want to talk markets out of the gate. That is a PS5. Yeah, I put the TV up here. I'm giving it a. We're gonna have some fun. I'm gonna try and spice up the stream a little bit. Right now, it's just pumping in the chat behind me, but I've got some ideas. And then, of course, if I've got a 65-inch TV next to me, I might as well be playing some FIFA. FIFA for now. Next month, FIFA is no longer, and it's going to be called Football Club. So, yeah, exactly. Yeah, a little combination of Twitch, FinTech. The whole bit. Teddy Brewski, welcome to the chat, man. I was just on his Clubhouse, stream discussion. So that was cool. Some good MMT for dummies discussion, and it was good. It was good. We got to talk about something briefly, which maybe one of these days we'll have to talk about here, and that would be reparations from an MMT perspective. Might be a worthwhile discussion to have. But anyway, I was just over there. Let's see. Let me give some shout outs. Teddy Brewski, welcome. Ghost on the Half Shell, welcome. Josh, welcome back, man. Thanks for joining. Ty Keynes, welcome. Ty Keynes, taxes don't actually get deleted. Ty Keynes, we can discuss that too. We can discuss that. We got Danger Zone also first in the chat. Thanks for joining, everybody. Yeah. Where do we begin? That is the question.
What are your semantic highlights? Are people only getting definitions wrong, or is there some fundamental misunderstanding? Because if it's only definitions, you'd expect them not to be losing much in the market. If that's all it was coming down to. So it's like is MMT just saying things differently? Or is it saying different things? You could start with that.
Okay. It's actually a good question. One of the things we've been having a debate with, I don't know, Colin Roche. I don't know if that's
Colin Roche.
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 Yeah, a few different ways. So he jumped into one of the chats that we were having and started dogging on MMT. I actually like to refer to him as Colin. He has I'm completely shafting the joke here as I try and spit it out. As I try and spit it out. Well, I'm also pulling up charts that I want to talk about in just a second. Yeah. He's got a fund. He has a fund that effectively tracks the S&P with all the downside but none of the upside. So I call him Colin, all the downside of stocks with none of the upside of stocks. Roche.
Hang on. If you're always on the right side, if you're always on one side, isn't that some advantage?
Oh, if you knew how to short the stocks. No.
Like a predictor or forecaster, I'd be a bit worried if they were sometimes above, or sometimes below, and all over the place. But if you're consistently below, I don't know, there's something in that, right? To be consistent, at least.
Yeah. If he just inverted his stupid ass system, here I'll bring it up. And then we can get into the market discussion.
Right.
All right. Here is his ETF fund. Oh, this isn't going to make any sense. Hold on. I got to get the 5 years. And now that I'm thinking about it, this is going to make even less sense. Yes, he is on Twitter. This is him right here. Give me a second, and I'll pull it up. I think I had it on TradingView, and you can. This will make a lot more sense when I pull it up on TradingView. In just a second here. Here it is on TradingView, and so the bars are his fund. So the green and red bars are his fund. I'm going to turn off the volume, and then the gold or kind of orangish is the S&P itself. So the joke is he figured out how to track the downside of the S&P. He just doesn't know how to catch it on the upside. And look, I can't be overly. I mean, trading is hard. I've had some, I've had my fair share of mistakes 20 years ago before I knew MMT, but since then, no, I'm being a jokester. Trading's hard. It's hard to come down on anyone who puts themselves out there. But going back to your point, is it definitional and that sort of thing? And Cullen has had a very long back and forth on the MMT stuff, and he had an article he posted a few years ago about MMT kind of getting things wrong, and I do think it's a bit of a definitional struggle. I don't disagree. Yeah. But here's the thing. This is actually kind of the thing. Is I think MMTers are very aware of what the private sector, what the public sector means to the private sector, and vice versa from a financial assets standpoint, right? Like we're hyper aware of that, and yet maybe a place where MMT can grow just in terms of understanding its full applicability to the entirety of the marketplace free enterprise and all that stuff is to incorporate some of the work like Ty Keynes and Steve Keen have done to understand what the endogenous cycle is doing and how it interacts with the larger marketplace. And I was actually I was listening to one of Steve Keen's videos today on the Minsky 100 anniversary where he was going over that, and he pointed out that point, and I agree. So I think I kind of agree with his overarching point that there's not enough understanding of there is. I mean, the MMTers who know it, but it's not vocalized. And so I think what someone like Cullen is sensing is he's sensing the endogenous cycle. He's sensing that arm of markets, and he's saying, no, MMT misses what's really important. And
you're right.
And to a certain extent, if all you're reading is Stephanie Kelton, who's just trying to correct like the core error that we can pay for it, it's okay.
Yes.
Yeah.
Yes.
Yeah. I mean, it's going to look like they're missing. They're missing something, right? And I don't disagree that it's going to look like that, but it's not that the MMT lens can't account for and doesn't have the endogenous cycle understood and incorporated. They do. But to the vast majority of MMTers to this point, it just does, they don't give a damn, right? I mean, that's just not that's not what they're trying, right? I mean, they're just trying to dispel this damn myth that we've borrowed from China and our kids got to pay for it, right? Like, I mean, that's still very much a thing. So I think that's where there's a bit of ships passing in the night with the discussion.
Exactly. Ships passing in the night, talking past each other. Okay, so I got a little bit of a take on that, right? So,
go for it. Yeah.
Okay, so from the very beginning, Warren, Bill, and Randy, I guess the key three, well, they came from post-Keynesian discussion groups. They all understood endogenous money. So, if Mr. Keen or Mr. Roche or anyone else says, the MMT doesn't understand endogenous money in banking, they're just wrong. And you're right that so the other thing, so Randy Ray often mentions that, and it's just people but maybe don't listen to him. but then you see Warren and Moore. I think Moore, Stephanie Kelton are in a slightly different space. They're talking more political economy, and where you've got government policy can be really dominant and can like ignore markets to some extent, can always outbid the markets and private sector.
Yep.
And it's really important to understand that.
Correct.
And that's the space the space of discourse that they're working in. They sort of like, oh yeah, endogenous mate, yeah, sure, we know all about that, but it's not relevant to the discussion at the political level where people are thinking, where politicians and leaders are thinking that they're constrained and have to sell bonds to private sector, and so there's bond vigilantism as a thing, which is not
still to this day. Still to this day, despite many of them being slayed over the last decade.
That's a huge discussion.
Oh yeah,
it's a huge discussion to have, because even though most money is created endogenously, what the government does is just massively important, and you're seeing that right now with the ability of the governments to continually pay interest on treasuries without batting an eyelid, without taxing anyone, without borrowing from grandchildren or anything.
Yep.
And it's just sort of supercharging the economy in a really terrible way, really regressive way. Of course, they think they've got it backwards, so they don't understand that's what they're kind of doing. They don't understand they're juicing up the economy right at the top end of town. Okay, and so then there's this other thing where you've got because that's a political battle, and obviously Stephanie is right in that mix because she was on the Senate Budget Committee and so forth, and the concern of Warren is mostly about the central bank operations, not so much commercial banks. Although he understands all the commercial banks as well, which maybe we'll get to with a little discussion you had with them a bit later, which was interesting. And so so MMT understands all, and then you've got Mr. Cullen Roche again. He's
do you know that it's pronounced Roche? You say it with such confidence. Okay.
It's going to be from now on.
Okay.
Because in case I don't want to do any gossip or backbiting, so it's just a figment of my imagination.
Yeah, that's good. That's good. I'll take it.
And so I think so. This figment of my imagination. So I actually read something this figment put up on the internet. I think was it Ryan or you or Adam was. Pointed it out. I think you did originally, right? Because it came up. You had to look into his writing and stuff, and reminded me that he had written stuff quite a while ago, like 2017 or something like that. Yeah. But I had a little read of that, and so he's harping on about the sectoral balance identity that MMT is keep harping on about. Yeah. Again, the thing about that. And his complaint about it is interesting, but it's a little bit, like you say, ships passing through the night, talking past each other a little bit, because that's a political thing. It's like private savings come from government spending in that currency and only in that currency. And the point of that, and the focus of a lot of MMT activists, is just that narrow point that it's about dollars or tax credits or the state currency. Whereas I think Mr. Roche is correct that people don't just save in the currency. So when you say private savings, you can save in non-perishable cream puffs.
Yeah,
or,
correct.
Whatever you want to save in.
Correct.
And that's not going to appear in the godly MMT sectoral balance equation. It's that's just about money. That's just the state and only the state currency, not other money things. Not corporate bonds, corporate paper, or anyone else's IOU. And so it was so annoying reading it because
it was very annoying reading it.
It's like it's not just nitpicking either, because the actual dollar identities, the state currency identities, which is the sectoral balance identity, they really matter because when we're talking macroeconomics, they matter because you can't escape them, right? And so if you don't understand it and you get it wrong, and you're not operating in that, I mean, it's very simple to understand. If you're not operating in that simple to understand framework, a lot of really bad policy can get generated. No damn good reason that people, other than that, just people are sort of ignorant. And then after you understand all that, and you've got political economy working smoothly and sensibly with an MMT understanding, then you're able to talk about more nuances involving relative prices, around distribution, around what things people want to save, quote unquote, in, and does it have to be the currency? No, it doesn't. But people are gonna want to save in the currency because of all the sort of fear and doubt and uncertainty that's created around your future expectations, your future income. Are you going to have any? Is there a job guarantee? No, there's not. Okay, so I'm in the precariat. All that kind of thing is going to force people to want to save. And I guess another MMT story is why. It's like, why do you have to save in the currency? You should remove all of that uncertainty and doubt.
Yeah.
And it doesn't change the MMT story though. So there's all those things and nuances that a lot of people who just want to kind of attack MMT you can always find something to nitpick and attack. And you gotta at some point ask the question whether they really are just talking about something different, or whether they're just trying to be, I don't know, clever, or show off to the mainstream majority. Because if you're appealing to MMTers, you're appealing to a minority, so you're not in a terribly great position as far as getting likes and clicks and donors and all that sort of thing.
Yeah.
So no disrespect to our chat, who are great.
We have the best chat in all the internet. Yeah. One of the things he brought up to kind of dunk on and try and intersect here with a little market analysis as well. One of the things he brought up is the sectoral balance thing doesn't actually show you anything, right? There's no value to the sectoral balance thing itself, as you were kind of alluding to, Bijou. And I'm going to try and spell out why it does matter. Specifically, the private public.
You're going to say it's for some reason, but I would say politically, it's a heck of a huge deal. But your take is even more nuanced, I gather, right?
Well, I mean, at the end of the day, the vast majority of people want to know, how do we avoid 2008, right? Like how do we avoid 2008? And let's not do that again. Maybe how do we avoid 2022, right? How do we avoid 2000? How do we avoid that sort of stuff? And again, if you just want to look at kind of what we'll call them the smaller epicycles of the business cycle within any larger cycle, you're going to have to look internal just to the private sector. I don't disagree that if you want to try and time every ebb and flow of markets, looking and understanding the private sector is important. But the overall sectoral balance approach gives you a ton of information about the capacity and the potential for the private sector. So again, just to intersect quickly with the market today, this is updated, the net surplus deficit. For the first time in a year, we've finally seen the acceleration give way of the increasing deficit. Finally give way, still making it year over year higher, but that initial kind of acceleration boost is done. Now, from a trading standpoint, it's that acceleration, that initial takeoff that you want to try and get, right? Some of the tools we've developed, we can kind of detect that acceleration taking place. If you can get in front of that acceleration, or you can time that acceleration, you're going to be able to catch the wave that we've seen, the 20%, whatever it was, liftoff that we've seen over just the last 6 months in the S&P. Now things are going to start to settle out, and likely we're actually going to probably hit a bit of a pause here for a while. Some massive tax receipts are going to be coming in September and October. California, if you're a California corporation, you haven't had to pay federal taxes yet this year, so we're going to get a big drain coming from there. But to tie this in even more, why it's important relative to a sectoral balance approach, the three sector, private, public, and rest of the world approach, is the public sector spending is private sector net financial assets, right? So in order to understand and in order to kind of give the proper interpretation of what the heck is happening in the private sector, you need to know how much, what the flow is that's getting pumped into that private sector. Otherwise, you're missing a key ingredient. And this is actually what I'm seeing on Twitter right now, is the key ingredient being missed here. Sorry about I literally just took this from my post on Twitter. Ooh. Yeah, but you can see my sweet drawings there. Yeah. If you don't understand that that effectively the income necessary to sustain demand or to sustain the savings desire is coming from the private or the public sector, coming from that government spending, you're going to look at the green line here that's dipping lower. Yeah, highly academic, Josh. Thank you. I've always prided myself on.
Meaning, I tell you.
It's a very academic here. Yes, you can see my annotations are properly aligned with whatever.
Douglas's case, like a picture is worth 2,000 words.
2,000, yeah, 3,000. No, I've got three annotations here.
3 trillion words.
This is very, very sad, very sad. But this guy's happy over here. If you don't understand, okay, so everyone's posting this chart right now that the H.8 credit data is collapsing. That's the green line here. Everyone's credit's collapsing. Yeah. Now, if we had no government spending, I would say, yeah, that's a really big problem. Credit's collapsing. Like that's not a good thing. We could be heading for a credit crunch here, right? Credit collapse before the dot-com blow up. Credit collapse during the Great Financial Crisis. Yeah. But you're missing half the picture if you don't understand sectoral balances. And even Colin Roach posted this chart, not my chart, but the H.8 data. Listen, it's important to understand where the flows are coming from and interpret it from that factor. Why does it not matter that credit's collapsing? Because the government is making it up by spending. They're making up the slack from the credit. And you see this is what's really, really fascinating too, is you see credit take a huge dive continue to dive after the Great Financial Crisis, right? So the Great Financial Crisis is over. We're post 2009. We're post the lows. Credit continues to surge lower. Why? It's because at that point the massive stimulus had taken place, right?
What does that mean? It goes negative. People are paying off their debt.
Or banks are offloading securities now to the private sector that has a lot more money. They're flush once again. The private sector is flush once again. They can purchase the assets, clear out the balance sheet of the banks. So that actually, I think the way to almost look at this is that last impulse lower while government spending is impulsing higher essentially sets up kind of a healthy banking system to allow it to now expand into the foreseeable future. So I think that's exactly where we're at right now. I think we are, we're set once, eventually government spending is going to do what it did after the Great Financial Crisis, after the dot-com bubble. Maybe, in terms of rate of change, right? It's going to start to level out. It's not going to have this massive initial impulse. It will level out. We're in a very peculiar situation because we have interest rates continuing to be hiked, but it will level out. And what will make up for that now is now the capacity of the banking system to expand. Now, there's not a ton of capacity the way there was before 2008 or before 2000, but it has some room to run. And as long as government spending is offsetting any potential contraction from the private side, we're not going to see a recession. So that's my story.
You almost had that recession, right?
In 2022,
government goes into a surplus position there.
Yes.
Yeah, and so this is a fascinating sort of chart you've got here. If you look at those three recessions, counting COVID as a sort of a technical recession there, right? You've got 3 different stories. It's really fascinating. The first one is a double whammy around .com, right? So the government is going to surplus because they think it's fantastic that they're saving their own tax credits. Whoa. And then credit collapses because of all the jitters that were came to be well understood. I think before the actual crash, I think a lot of players were shorting, and a lot of people, the knowledge was out there, right? And I think you could say maybe that was a double whammy there. But then you look at 2008. Maybe the .com. Maybe my story about the .com is a little bit clouded. It was too long ago to remember. But then 2008, it's like, well, maybe people. It's hard to say that the 2 things happened at the same time, because like you say, you've got the credit collapsing after, which was, as you say, it's a story it's a narrative that you just pointed out. So it's kind of more the government moving into surplus combined with all the mortgage-backed securities
Hey,
and the.
hey, Bijou, I hate to cut you off. Can you stop sharing your screen real quick? And we're gonna special guest incoming right now. Special guest incoming.
Mr. Ryan Casa, good to see you.
How we doing?
Ryan,
we're doing okay. We're just going through the sectoral balance chart and
why sectoral balances matter.
It's got three different stories there for each recession. 3 different stories. It's slightly different. And the one coming out of COVID is the most fascinating because it's the weirdest, right? So there's going to be a lot to be learned from this. What is going to happen to government spending there going forward? Is it still going to go up because of the high interest rates, or are they going to pull back? Cut the rates, and then what'll happen? It's like, whoa, there's a lot going on here.
That is the $1 million question.
Super important, man. It's like I don't see how you can't sort of just go and blindly underplay this and say, oh no, it's all about endogenous money. There's more than one story to tell, and the exogenous money is just such a huge part of it. I'd say particularly with the USA, the way the USA is structured and operates. But yeah, Ryan, what's
going on? Yeah, what's going on, Ryan? By the way, welcome. One of our,
thanks for having us, guys.
I think I got more positive feedback when Ryan joined us a couple weeks ago, maybe a month ago now, saying, "Hey, get this guy back on, than I even did Warren Mosler. So,
all right,
we got Ryan back in the house. Sorry, Warren, if you're watching.
Warren's too busy taking victory laps.
Oh man, yeah.
I think he's visiting Stonehenge.
Yeah, he is.
That's right.
Off in the UK, going through the rounds, which is good for the UK and Scotland. Hopefully, that generates some webinars and YouTubes from that trip.
Yes. Ryan, what's going on though?
Yeah.
Not much, man. Just just been grinding away, trying to navigate these markets. Been catching up on some earnings calls. Because a lot of times they'll kind of like overlap. So as it slows down, I'll catch up on some that I might have missed. And just kind of riffing off of Bijou, what you were just saying about the whole, what happens if the government takes away some of the spending, the fiscal spending. I listened to the Bank of America second quarter earnings call, partly last night, partly this morning, and one thing that they've been talking about is that their customers' deposit balances are still on average like 3 times what they were pre-COVID, and so isn't that like I feel like one statistic that we kept hearing pre-COVID was the lack of savings that people had, like half of people couldn't pay for like a $400 emergency thing or something like that. And I mean, that's just like if you think about it, like that's a very fragile way to run an economy, to have people with that little in savings. So the fact that people have 3 times as much savings, I mean, I'm not saying that there won't be a slowdown or something. Oh, is that my mic?
No, that's the kid outside mowing the lawn.
Okay.
Very loudly.
Nice.
No, it's not nice. No, the sun's practically setting out here, and this kid's out mowing the lawn. There's massive lawnmower underneath my window.
Interesting frequency response. It's like the brown note. Almost.
Could you hear it? Oh my God! All right, I'm not talking. I'm just gonna mute myself.
That's very low
I'm just
frequency
gonna mute.
Getting through.
No, that's wild. That's freaking wild. Yeah.
Well, it's just so interesting.
Hey, kid. Don't you understand? We're trying to learn MMT. Oh man. Oh, sorry guys. He just flipped me the bird. Okay, maybe it's.
you got some acting talent there. That was like
Ryan, I hate to cut you off. Go for it, man. Go for it.
Well, I was just saying. uh, I think that's a big reason as to why we already kind of had the soft landing in in the first half of 2022. We had the massive fiscal tightening. Now, obviously, there was still some nominal deficit spending in 2022. On a real basis, though, Douglas, as you've like to point out, we actually went into surplus, but because of the spike in inflation. But it just kind of goes to show that despite having what would have been in most cases considered a recessionary period, right? 2 straight quarters of negative GDP growth. We were able to avoid a recession. We still had job growth. We still had improving employment, and to me, like, that's very much a testament of, okay, like, people had private sector, household and corporate balance sheets were in much stronger shape than they were pre-COVID. People had more savings, so they were able to absorb that kind of that tightening and energy shock, and avoid a recession. I think that has to be so. I don't know if like we'll see as explosive of growth. I mean, right now, I think the Atlanta Fed GDP now was just printed at like 5.8% or something absurd. But I do think that this economy can withstand a lot of things. Now, one risk to the economy that so I had Charles from MMT Twitter on. We did a recording on the Applied MMT podcast last Friday, so that should be coming out any day now. But he made a great point and said that if in the U.S. if the Republicans decide to go scorched earth and don't pass a budget for 2024, I mean, the government could go into full shutdown mode, and that would be obviously very, very bad for the economy. But he sees that as a risk, and it's something that's not really being talked about. I'm like, you want to know something? You have a point there.
I'm sorry. Say that last bit about what's the point? Who has a point there?
So I don't know if you know Charles from.
Oh,
MMT
Charles said
Twitter.
that. Oh, okay. Charles said.
Yeah.
Charles was saying that if the budget spending doesn't go through, we could very quickly hit.
Yeah, if we don't pass the budget and the government shuts down, then it's very bad.
Yeah. Which would
and
which would be something the Republicans would want to attempt to do.
There's a non-0% chance that happens.
Yeah. Oh my God. Okay. I'm gonna take over for just a second. All right. So deep MMT, right? I've done this twice now, where I've built highly sophisticated models that called the market perfectly, and I haven't believed them. Right? Because I mean, a few months ago, when I showed off deep MMT here, it said August high, August 13th, I think we were going to peak. Lo and behold, it looks like that's what's played out. But it wants to continue to see things fall through October, and it has a much deeper pullback than I think should happen. But that is definitely the pathway that we could get there, right? Is just the government shuts down. Now, would the government shutting down, though, kill spending, right? I mean, the TGA would still by that point, be chock full. Spending would still go out, correct?
I assume so, but I mean, I remember, when we had one of these bad shutdowns, like there was like the whole sequester thing, and there was all these cuts. Government employees literally were like, their payroll got shut off. So
yeah, you're right. Yeah, you're right.
So I don't know.
Right.
I'm not as familiar with the protocol. I mean, maybe they, kind of going through this whole prioritization thing. But yeah, it's definitely it's definitely a risk that happens.
It's a weird one though, because it's always transitory, right? Say shut down governments, all that theater happening again, which is a huge, like you say, it's a huge shock, and it can be really bad. But it's like, where in the world is any country that's operating fairly normally? They're not getting invaded. There's no like drought or famine or any natural disaster, but the government shuts down. It doesn't happen too many places, so it's always a bit it's very interesting when it happens in the USA, but it's interesting for the wrong reason, but it's also, it's like you get some good interesting data from that, right? Because it's usually transitory. You don't even shut down the government. It's like
Right.
Yeah, but so I mean, I understand what you're talking about there, but it is, yeah. What am I saying? It's interesting when it happens, and it will be interesting again if it happens.
Yeah.
Governments don't just shut down. And I think with Douglas, what was your point there, Douglas? That there's already a lot of baked-in spending that has to go out anyway.
Well, okay.
But it's interesting how big an effect a government shutdown or a
would
week
actually,
of wages and that can actually happen, because you've got such a massive number of people there. Now, the narrative, tell me if I'm wrong, but the mainstream Austrian neoclassical narrative will be, oh, well, that's a great thing, because now taxes or borrowing isn't being sucked off the private sector to pay all these government wages, and
it is.
They're going to have to go out and fight for their, fight for cash from somewhere else, and the government's not sucking it out of us to feed it to all these government employees. That's a good thing. Whereas,
Right.
It's a terrible thing, and a real shock if you're on the MMT side of things.
What's so crazy though, like you hear something like that, and it's like, do you think that those balances just pile up in those people's bank accounts? Like, no, they go out and they spend that money. They pay for rent, they pay utility bills, they pay, they buy food and other non-discretionary things. They make auto loan payments, they make mortgage payments. It's like all these like you're basically saying that you want to shut off this gigantic revenue source.
Yeah.
By the way, the United States government is the largest employer in the United States. So,
that's what I'm saying.
It's just totally crazy. And I mean, I'm just gonna point out, Douglas, like I don't know if you guys already talked about some of these Bob Murphy tweets at all tonight, but
that's coming up. That's coming up in hour 2, baby. Let's go.
Oh, okay.
Yeah.
Or
whenever we decide to bring him up. But yes.
Well, I was just gonna say, like, one thing that he's been kind of I don't know, evangelizing, for lack of a better term, is this period when Andrew Jackson paid down federal, and I'm like, I actually can't think of a more anti-business, anti-markets, anti-American, frankly, stance than bringing the government debt down to zero. That's actually insane to claim to be like a pro-business guy, and that's what you're advocating for. It's
quite a contrast to that article you sent from Warren Buffett. Quite a contrast there.
Exactly.
Going back to what you just said about wages, that all the government wages you usually spent. I mean, most people in government aren't exactly living on the high hilt or anything. So they're spending a hell of a lot of their wages relative to more wealthy people. But also, that kind of intersects a little bit, I think, with what Colin Roche was talking about, or maybe it was somewhere else, I forget. But just recently, I was coming across a bit of discussion. It might have been Roche or someone else, but they were talking about how wages are a cost to firms, blah blah blah. And I'm just thinking, well, yeah, wages are a cost to firms, but that's a very micro level sort of take on wages and employment versus unemployment, because it's a composition fallacy, don't you think?
Yes.
Because in the micro, yes, it is, but in the macro, the wages are how people pay for things. That's how you get sales. So
Exactly.
even if a firm is having to borrow from a bank to pay their wage bill, they get it back if they're actually making sales and they're not some sort of predatory firm. Or even a predatory firm, they probably get more back. But you know what I mean. If they're not like a struggling startup or some business, but they're established business, just either a mom and pop store or one of the big retail giants, or whatever, their sales get funded out of wages. So when you say wages are a cost of firms, that's just missing the macro picture. It's a composition fallacy.
And that's why he runs all the downside, none of the upside of stocks fund called the DSCF, listed on the NASDAQ or whatever it's listed on. Yeah.
Wow. Crazy, man.
Real quick, I gotta just get this off the screen, but I want to say McCarthy. This is today. McCarthy floats stopgap funding to prevent a government shutdown at the end of next month. So yeah, he's very happy looking in this picture too. It's a very excited face he's showing there. Good thoughts on that. I do want to jump back to the Cullen Roche and that discussion, so I'm going to take this off the screen now. And we can go talking about whatever it is that we were going to talk about. We'll see with the government shutdown, though. I mean, it is interesting. I mean, you are right that there's a greater than non 0% chance that something like that happens, and the knock-on effect would be very swift. I would say, though, going back to some of the Bob Murphy stuff with the government spending. I mean, if you really believe that the government requires the financial assets of the private sector to spend, right? I mean, if you really have it backwards, then from his perspective, it would be correct to say don't do it, right? On the flip side, though, it's not the case,
right?
I just and hopefully, I mean, I've had I think what has been a pretty productive discussion with him. So hopefully. Here's kind of my hope, right? So at least for Bob and anyone else who's going to kind of follow a discussion after the podcast comes out, hopefully when we do finally get a recession, it's very clear that government spending, right? In other words, we don't get a recession because an asteroid hits or we have another pandemic or something, right? But if we get a business cycle recession, then it happens if and when government spending gives way, right? Like so we can at least point to once again government spending gives way, and the causal factor there is now the flow into the private sector of new net financial assets to allow the business cycle to run has been removed, and that's why you get a recession. So I'm glad you brought this up, though, because I'm going to email him. He's kind of fingers crossed that we get a recession by the beginning of next year. Otherwise, his theory doesn't.
What a patriot! Let's hope it's
no, he doesn't mean it like that. I mean, he means it more like just kind of like for us, we almost want a government shutdown to happen so we can say, this is the next experiment, right? That we get to run. So I mean, I get it from his perspective. So I gotta email him and let him know he needs to call up McCarthy and stop the stopgap. So he can win the bet.
Good point. Oh, geez. But like you say, that is all true unless something really drastic happens, like Congress decide to peg to gold or go back to a fixed exchange rate, right?
Yeah.
Because then it's like you're just forcing piracy. So then it's a deflationary sort of environment policy.
Oh my gosh.
And you do have to
so good.
You do have to pirate those tax credits back off the private sector in order to stabilize your price level. If you want to do that, right? You don't have to. You could peg the gold and just run or fixed exchange rate and just run inflation really high for forever. If you wanted to, you could kind of do that, although it would be kind of crazy. But yeah, I mean, on a floating exchange rate, you don't have that constraint, right? And so there's no necessary reason to like quote unquote fund the government's policy of wanting price stability. in that particular way when you're on a floating exchange rate versus fixed exchange rate. So that's what Murphy's thinking. Is still, I still don't think he's made that transition from fixed exchange rate or gold currency to a floating exchange rate. And if he just made that flip, a few switches might go flipped in his head, and he might be able to tell a decent story and not have to worry about his crossed fingers.
I don't know why, but I think there's a non-zero chance that Bob comes around. It's really weird because he's good friends with George Gammon, and I can tell something's clicked with George Gammon, that he understands that, like, the Austrian story isn't 100% right. So I'm hoping. I've got hope. So that'll be we'll see. Obviously, got to wait till April of 2024.
By the way, guys, how funny is it that this guy, this kind of crazy libertarian guy in Argentina, that his primary proposal or whatever for the Argentine economy is to peg the Argentinian peso to the dollar.
Oh wow! Yeah.
I mean, obviously we know, like, that's very stupid because you're giving up your monetary sovereignty. But it's just funny because in the U.S., people are like, "Oh, this hyperinflation, we gotta go back to the gold standard, or maybe or Bitcoin," and the rest of the world, they're like, "No, we need to peg it to the dollar."
Yes, exactly. That's such a good point to make. Yeah, like in the USA, oh damn, we're pegged to the dollar. US dollar is pegged to the dollar. It's gonna melt down. Argentina, hey, we're melting down. Let's peg to the dollar. That's a hilarious point.
Right?
Yeah.
Are they not pegged to anything right now? Then I guess I didn't realize.
I think they're their own.
Okay.
I think they're monetarily sovereign.
Although they were running parallel currency, weren't they? So they were issuing.
Okay, I didn't realize that. Okay,
but they had to pay for, and then.
Got it. Yeah. So they have. That's right. Because I visited there a couple years ago, and they recognize dollars as legal tender as well.
Okay.
Right.
So yeah, I guess parallel system or whatever you want to call it. Yeah, that's a good point.
Okay,
but yeah, it's just funny.
And they're also issuing dollar-denominated debt, quite a lot of dollar-denominated debt. Correct? Maybe not.
That I'm not sure.
They were. They periodically get into trouble with the IMF.
Okay.
Not sure what their position is now, but yeah.
This is an interesting one. August. I don't think I've shouted you out yet. August, welcome, man. Appreciate you showing up. I think part of the story is that there's still a sense that government debt steals value from the dollars in your pocket. This is interesting. I forgot where this came up. The government. Oh yeah, I was listening to a different debate, and the guy was kind of neoclassical type of guy, and he said something to the extent of, and I just kind of want to think this through. For those of you who don't know, next Tuesday, I think it is Tuesday at 4 Eastern my time, I'm going to be on the Adam and Sitch live stream. There will probably be they get into the thousands of viewers, so it'll be good. Most of their 60% of their audience is definitely right leaning, but they would call themselves progressive. So watch out for the tweets to check that out next week when that goes down. But I was listening to a stream that they had prior, talking to a neoclassical guy. One of the things he said is that one of the arguments he made is, look, inflation, the printing of more money is just a stealth tax, right? I mean, it's the same thing. It's stealing value from the currency. I obviously have my own thoughts on that, but I thought that might be a fun discussion topic I can get your guys' take on, because it rubs me the wrong way. But I'll let you guys take a crack at that one first.
He's being a neoclassical, but.
Yes, he is. Yes,
what
he
do you
is.
expect? But I could also tie that into something I heard the other day. Okay, so I'm reading through Steve Keen Substack or blog or whatever it is, and he's quoting Richard Vague, one of his buddies, who's big on the private debt, household debt going, ramping up, being a major indicator of recessions. But he has this interesting paragraph where he says, "Gosh, damn! I should have brought it up on screen. I probably do have it. So if you bear with me, oh yeah. So he says, so this is Richard Vague. He says, during darkest hours of the global coronavirus pandemic, the U.S. government spent $3 trillion to help rescue the country and, to some extent, the world's economy. This infusion of cash increased U.S. government debt. Correct. And thus reduced U.S. Well, actually not correct. Right? You don't issue the government debt until you swap those reserves for bonds. But anyway, let that pass. And he goes on. And thus reduced government wealth by almost the entirety of that frighteningly large amount. The largest drop in government wealth since the nation's founding. Surely something this unfavorable to the government's balance, quote unquote, balance sheet would have broad adverse financial consequences. So that's interesting because he's kind of setting up a straw man there, right? Because maybe he's a bit aware of MMT, and he does put quotes around balance sheet. So it's like Steve doesn't actually really correct that. He's just going on a glowing review of Richard Vague's book. And so I only get a little few quotes from this, but still, it was rubbing me the wrong way. Don't say those things unless you immediately counter them, right? It's like yeah. I'll say that again. This infusion of cash increased government debt and thus reduced the government's wealth by almost the entirety of the frighteningly large amount. Oh my God, that is such banana brains. I mean,
I know.
I was puking. I was like, oh, what are you guys doing? But anyway, so the point, and it was worse because he doesn't, in the next paragraph, he doesn't immediately correct it and say, this is all wrong. This is the wrong way to think about what government is doing, And so, oh man, I was fuming. But anyway, so that like I say, that sort of, I think that I was trying to tie that into what you just said.
Yeah.
What did you just say?
It doesn't matter what I just said.
oh no, because you're talking about like the inflation being like a hidden tax, and it's all this.
Yeah,
nonsense.
the hidden tax. Yeah. It's like the currency goes one way, real goods or people being employed in the public sector go the other way. They get brought into the public sector. So there's no in what do you call it? Not nominal real, but in sort of net terms, there's no change. It's like the trade balance, right? Trade is always balanced. The current account matches the capital account. Currency goes one way, real goods or financial services or whatever go the other way.
Right.
And so it's always in balance. And so where's this massive loss of government wealth? It's like, oh, but this is stuff I can type on a keyboard into people's accounts with a keyboard. How is that a loss of wealth kind of thing? And
right?
And it's actually increasing the government's real wealth because they're bringing in services,
exactly,
or workers or employers into the public sector. And so if the government is us, the private, is our representative, our public sector is our representative in all things, society related at that kind of level, then it's neither increasing nor decreasing wealth. It's just a balance. Right. It's a balance. There's always a balance. Okay, maybe it can be a bit skewed because you got crony capitalism and all that sort of thing, but still. Okay, what the second thing, it goes to the point, I think Douglas's point about, who was it? Was it you, Douglas? Someone was talking to me earlier this week about how this division between public and private sector is maybe a little bit vague, and MMTs get criticized for making it too sharp. It's like, when government offers services in its work that's being done in the public sector, but who is it benefiting? You could say a lot of government services sort of benefit everyone, even if you're not using the U.S. Postal Service. Someone does. It lowers the friction in the economy in many ways, pulls the plastic bag off the head of the economy. So all that stuff, is all good stuff. Yeah, just wanted to make a note of that.
Ryan, you don't have to give a follow up. Yeah, but I did want to hand it off to you. I know you also wanted to come on and talk to about a handful of things you had, but take it away.
We
with
had a
whatever.
question from Ghost in the Half Shell that goes to, I think, one of Warren's conversations with you, Douglas. I don't know if you wanted to bookmark that.
Yeah, why don't you bookmark it? Is this really the real Lacey Hunt? The Lacey Hunt? That'd be cool. But Ryan, you wanted to jump in. So why don't you jump in? I'll shut up.
I listened in on a stream, I think it was a couple weeks ago, and Bijou, I think you had a long tangent, and it was kind of about and I know Moser's talked about this, but this idea of the extraordinary wealth accumulation, and how that can kind of distort a society and an economy in ways that are undemocratic, right? And the problem is not necessarily the wealth accumulation, the financial wealth accumulation per se, but the actual spending of it that can influence political outcomes and stuff. And that it just kind of got me thinking, because earlier this year, just back up for a moment. So I've followed Warren Buffett for a long time. My firm actually goes out to the Berkshire Hathaway shareholder meeting every year. And let me just say off the bat that I don't consider myself like a Warren Buffett sycophant or whatever.
Stan is the word.
Yeah. I think people have made some. I've read some very, very thoughtful and reasonable and critiques of him, over the last few years and stuff. Particularly, I mean, you actually hear it from all sides of the political spectrum, right? People on the left, are critical of him for, kind of being
existing.
Yeah, for just being this extraordinarily wealthy, wealth accumulator, and I think even Matt Stoller has labeled him like America's folksiest predator, which I think is a little harsh, right? And then people on the right, criticize him for kind of being like a hypocrite, like saying you gotta raise taxes, but then is extraordinarily savvy about
not paying
minimizing
taxes.
About not paying. Well, yeah,
that is the damn American dream. Okay, to have enough money to hire a good accountant to not have to pay taxes.
Right.
There's nothing more American than that.
Or like people will call him like a crony capitalist, which I'm not sure that's really a fair critique either. But so I kind of like I'm not like a complete. I'm aware of the critiques of him, and but I think on balance, like he's probably been a positive influence for a lot of people in the world. And the one way that I kind of have reconciled or bridged like a lot of what and by the way, Stephanie Kelton quoted him in the Deficit Myth, and the guy is clearly like a genius, right? Like Moser's a genius, Buffett's a genius. I think that's it's pretty clear at this point. But just kind of going back to that idea about the extreme wealth accumulation. I mean, Buffett is actually a guy who's notoriously frugal, right? And I think you talked about this a little bit a couple streams ago, saying like, okay, like, does that extreme frugality kind of hurt the, economy because you're not spending, right? And as we know, like that spending is someone else's income. And so That's been a huge. I mean, he wrote in his shareholder letter this year, um, just kind of really emphasizing the point that like he and his right hand man Charlie Munger have always taken a lot of pride in practicing extraordinary frugality. I mean, the guy bought his house, I think, in like 1958, and he's lived in the same house the whole time. He pays himself $100,000 salary, which is a lot, but it's peanuts compared to what most American public company CEOs pay themselves. Um, uh, they have I think Berkshire shareholders pay for his security detail or something like that. But and he's just like a notoriously kind of frugal guy, and that's a big reason why he's been so successful at accumulating financial wealth is by saving and investing successfully. And so, and when I was thinking about this at the beginning of this year, when we were kind of talking with Mosler and this idea of like a real resource dividend and stuff, and it kind of occurred to me like I think there is something to be said about that kind of practicing the being frugal and not over consuming, because in real resource terms, right, that is serving that is serving a public good, right? You're leaving real resources. I feel like people on the left, people that are a lot more climate focused and stuff, are like, yeah, we don't want to leave a planet that's burning up to our grandchildren because we decided to consume all this
Right.
all this energy and stuff, right? And so that's the idea, is like the finance and accounting and all this is supposed to the best system we have for tracking sort of real resource use and consumption and stuff. And that's the whole idea behind capitalism, is that firms that are able to get better output per unit of input are supposed to be rewarded. And so I really think if we want to culturally or what have you, and I feel like Mosler has kind of made this. I've gotten this similar vibe from him, that it's like, yeah, people, it serves the public good if people didn't consume as much. And okay, sure, like maybe spending in the private sector would be down, but that just means that there's more real resources available for the public sector, right? If you have if consumption of it's just like consumer goods purchasing goes absolutely crazy, then that occupies people's jobs and occupations, and that leaves fewer people to do work that's could be better served elsewhere. So to me, and I just wanted to kind of throw that out there, and I know that it's a little bit of a controversial topic, but I do think there is something there,
When
as a way of bridging.
I think I'll agree with you that there's definitely something there, but there's two sides of it. When you've got a highly class sort of divided society, so you've got a lot of wealthy people. 20th century generated a lot of incomes for people, a lot of wealth, and the question is, the whole thing is living within your means. What's that really mean? Living within your means. Okay, it shouldn't be about your income. It should be about your use of real resources on a finite planet, and the rate of use of your
Right.
resources is what is critical. Not just whether you use things. If things are there to use, they should be fully employed. The problem is the rate of use of things that are available that can drive up a lot of waste, pollution, climate boiling and all that sort of thing. And so when you say living within your means, I think it's a really useful thing to translate that into real terms.
Yes,
It's like you say,
yes.
being frugal is not a bad thing, but that's relative, right? So if you're paying yourself 100,000 a year, and your fund or whatever is earning millions or billions or whatever, it's like it's kind of a bit gross to say, oh, I'm being frugal and living in my means, but because of course you can afford to. But there's this whole other segment of society, the vast majority of people couldn't even live within their means if they tried. They're always living beyond their means in terms of income, and because they have to. They just to eat and survive. But they're living well within their means as a person, as an individual consumer, because they're living
real resource
even
consumer.
more frugally than Buffett because they got no choice about it. And so the narrative, I think your narrative is correct for people who are well off and can afford to, not just spend on all these sort of luxury items, all this, gross consumption that really doesn't serve any real public purpose, that is just wasting resources, or just, buying up land, being predators on everyone else in society who, not because of their own fault, through no fault of their own, cannot ever and will not ever enjoy that type of standard of living just because it's denied to them. And that's by an accounting identity, because we live in a monetary system. So it's a really interesting link you make there between the monetary system and the real economy, real resources in that. And I'd say, although there's a big middle class, but there's also, two sides of that as well. And people who are monetary scarce don't even get a chance to be frugal in any sense. They have to spend more than their income. And because their income is so poor, they're also living within the planetary boundaries. So they're being yeah. So it's a good story. And yeah, I think Warren also is probably someone who you'd say is frugal within his, within his sort of budget or limits or whatever. It doesn't just excessively consume real resources with his financial wealth.
Right.
And
exactly.
yeah, I think there's a lot to be said for that. If people,
I think there's definitely some virtues to take away. I mean, it doesn't surprise me that that Buffett's kind of like. I mean, his first wife actually, who passed away. She got cancer, unfortunately. She was like a very kind of like she was like a political activist, very active in like the civil rights movement and stuff. And he talks about how he grew up in a very kind of conservative Republican household, but kind of came to realize that there wasn't that much difference between Republicans and Democrats, except that the Democrats seemed like they wanted to actually help people. So he's I guess he switched parties back then. In large part because of his first wife and her kind of political activism. So it is interesting, to kind of to really sort of think these things through and think, try to sort of bridge these two worlds. One last thing I'll say on this topic is, he said, I forget if it was this year or last year, in the shareholder meeting, he made this comment about, because he's big in insurance with Geico, and that I think it's is it either Allstate or State Farm? I think State Farm. That's still the largest of the insurers in the U.S. and it's a mutual company. Mm-hmm. And his point is and he said none of the business schools ever do case studies on this company, despite the fact that they're still the number one. All this stuff about you gotta have the right incentives, you gotta make sure people that there's a profit motive, and blah blah blah. And meanwhile, you have the largest. I think it's State Farm. Um, Insurance company in America, and they're a mutual company.
Mm.
So it's just it's just I don't hear you never hear anyone else bring that up. So
Yeah.
Is your point that you don't need cutthroat capitalism to create a large company, a successful large company? Is that the point?
I think that's what he. I don't know if that's what he's getting at, or if he's just getting at like you just have to like we should study that. It should be a case study, right? And see why that has worked so well. I think if not trying to put words in his mouth, but I think Mosler would probably argue that by not having shareholders, it probably has a structurally lower cost. A lower cost structure.
Okay.
Right?
Okay.
There's no one that's demanding a return on equity capital.
Okay.
So if that's zero, then that's gonna you're gonna be a lower cost provider.
Yep.
Which is also, I think, why he makes a case for things like like universal healthcare and stuff. It's just like, there's no profit motive. You don't need all these compliance costs and marketing costs and stuff. So it's just has a lower cost structure. But I think he has in the past defended for-profit banking. Just because like that, there is some real sort of credit analysis that has to go into that, and so I think like having some sort of profit motive there. I think he's made the case in the past that that does serve public purpose. But it is interesting, and no one, again, to echo Buffett on this topic, like no one does a case study on State Farm and why there's still the biggest and so
it's interesting though. I think in terms a lot of progressive left-leaning economists are probably maybe missing that there, because something I don't know, you could tell me if I'm wrong, but maybe similar, but they put a lot of their focus on organizations like worker cooperatives. And I think that's just a sort of a tone thing. It's a more political favoritism thing. They think in terms of worker cooperatives rather than anything in the financial sector. And so I think in that sense there is work being done on that type of system where workers or a cooperative owns the business in a sense, and there's some sort of democracy involved in that. And and I think that's what you can get with other models like banking cooperatives, and that operate a little bit like that too.
Well, that's like credit unions.
Like credit unions, yeah. And so, they should study that as well as the worker cooperative model.
I mean, it's kind of funny to me because it seems like there's these like little crumbs of like our historical past of like the whole mutual structure and credit unions and stuff. It's like, we already thought of a lot of this stuff. It just because of the political flavor of the day, kind of went out of fashion. But I think it's kind of starting to come back, some of these ideas. So
yeah.
I mean, that whole discussion died out because of Reagan, right? I mean, Reagan supercharged the creation of the financial sector, which took over
neoliberals generally. But
yeah,
true. I'd say you're right about that.
I mean, that's
killed off
any momentum that might have been there.
Killed off a lot of that, definitely. But there are a lot of countries around the world, not just USA, but in Africa and other places where they should also be looking at all this stuff, because it's like low hanging fruit in a sense. They could really help them as well as getting off things like the Central African franc and whatever else, and IMF funding and all that sort of thing. There's all these other little models, like you say, of like more sort of I'd call it a democratic capitalism. When I say capitalism in that sense, I would mean fair markets, not free markets. Fair markets.
I thought I finally switched you over to exploiting labor.
Yeah, you brainwashed me.
Well, Doug's been a good boss. He's exploited me nicely.
Yeah, exactly.
He's been a benevolent exploitator.
No.
It can work.
That model sounds good to me.
Yeah.
Work underneath yours. Yeah.
I don't know why I hadn't thought of this before.
Exactly. So call it what you like, but it's when you're working at a sort of the same sort of camaraderie level as your boss, you sort of have got a bit of a workplace democracy thing going on.
Yes.
Okay. You have so many returns, so many good, what do you call it? Increasing returns that happen from that instead of using a competitive model. And the whole idea that capitalism has to be competitive, I think, is the downfall of capitalism. And then so it's just cooperation among human beings just works out so much better. And the competition is an interesting little element that I always feel should be there in terms of like little kind of rivalries. It's what I get from the scientific community. It's like everyone's trying to outdo each other, but it's like you also share results. Like mathematicians are notorious for being anti-capitalistic in their profession. They don't know it as anti-capitalism, but that's what mathematicians are. They don't want to patent anything. They just, every mathematical theorem that's ever been discovered, except for this curious period during the early Enlightenment or Renaissance, where things that were a little bit interesting. When people were amateur mathematicians, right? It actually, they did kind of hoard their results a little bit. That was a little sort of competitive aspect amongst amateur mathematicians during the Renaissance, is they sort of would keep results secret, and it was like a little game. It's like, I've proven this result, and so their guy would say, well, yeah, but prove it. And
now you're going to show me.
You prove it. No, you prove it. No, you. And it was like a rivalry, but eventually it wasn't done for any profit motive.
Pixar didn't happen, bro.
Yeah.
It was just an ego thing.
Yeah. So that's why I'm always so much like the free software movement, because you get paid to produce or write your software, but then it's freely distributed because it's zero cost to copy software, and it's like a mathematical theorem. It's zero cost to use a mathematical theorem, after the fact that it's been generated or discovered. And mathematicians just are totally communistic. Give away all the results, and it's a massive benefit to society.
What's funny, Bijou, is as you spell this argument out, right? As someone who's writing software to hopefully get people to pay for it forever, right? You're actually kind of making the argument, to me at least, that maybe I want to start copywriting mathematical theorems if possible. Oh, you did addition. You did addition today. Well, that's quite nice. You owe me.
No, I did Douglas addition.
You did addition. You owe me a little bit now. Sorry.
Exactly.
Isn't that basically Web3?
Yeah. Douglas addition key. Can't press that without license fees going to Douglas. Imagine the drag on society.
If every time you wanted to add, you had to pay some, probably Greek guy, I don't know, whoever invented adding addition. Yeah.
So anyway, So where was I? I think that was the point.
Yeah.
Next question.
Next topic. Ryan, did you have anything else that you want to highlight tonight? One of the things I wanted to get to was some Twitter X drama. Which would be fun to get into. We also had one question.
I've got a few minutes left. So yeah, let's talk some Twitter.
All right. Since. By
the way, I refuse to call it X.
So do I. It's so dumb.
Yeah.
So dumb. I'm no longer 13. X is just not cool anymore.
Yeah.
X guys. All right, Bob Murphy brought it up. This is one of the questions. As he brought it up, I mean, it was one of the questions that was in discussion that we had on our podcast. That there's this like, let's see. Well, I can just read it off. U.S. private sector can't grow long term without either trade deficit or government budget. So the Earth itself is long-run GDP growth, etc., without a run-up in margin debt. What's the explanation? Now, a long debate came out of this that went multiple directions. Go at it. I'll give you. I mean, I can also just kind of
Can you bring that up again?
the actual
I was reading the chat instead of
the
reading
actual
the screen.
tweet. Yeah. So
I had a hard time really understanding
coming. Yeah. Okay.
what he was trying to say, but I think in general what I would say is, first of all, I don't know anywhere of MMT saying that you can't grow GDP without government spending. I mean, I think it's pretty clear that you don't need government and spending to grow GDP. I think the MMT argument is that you in order to have net financial a financial surplus in the private sector requires the government running a deficit. I that's different than GDP growth.
Mm-hmm.
Well, put it this way, right? GDP is, well, if you understand the system of national accounts, you know GDP is there's not many flaws in it, but mostly it's if you take out imputed rent and a lot of other nonsense, it's mostly economic output, real output. Okay,
Right.
but it's measured in dollar terms. There's a numerator associated with it. So you don't say, oh, we made 1 million bananas this year, and we produced 100,000 silicon chips, and we produced this many houses. They all have to be, if you want just one measure for that, instead of a huge table, like a humongous table for all of them, just counting each of them and how many joules of energy it went into them. You have to be using a monetary unit. It's just a convenience, and so that's how GDP is counted. So it's the whole point is growing GDP. It's not an issue to me. It's like not an issue. We don't have to grow it or degrow it. It's whatever it is. It's whatever we're producing, whatever output, and it just happens to be counted in units of a state currency. That's all there is to it. Now, the composition of that matters a hell of a lot. It's like, what are you producing?
Yeah.
Bombs to go and burn houses
Yeah.
down or
Yeah.
smash up another country? Or are you producing more sort of housing and healthcare services and that kind of thing? The composition of it is hugely important. But the value, the amount of it is irrelevant. It's just whatever you can produce. So you might want to focus instead on the composition of what you're producing, and whether you're actually crushing the working class in order to produce it and benefiting the rentiers. How you produce it and what you produce is what is important, not the number. The number is just whatever it is at the end of the year. Whatever you manage to produce, it gets counted in terms of a unit called the US dollar.
Bijou, that was really well said.
So whether the government deficit happened to be part of that or not is also irrelevant, because that's an accounting residual. Maybe you had a lot of unemployment that year, and so the government had to run their, de facto weak as job guarantee scheme called the unemployment benefit. Here's a job for you. It doesn't really exist, but here's some pittance of a wage for that anyway. That's the current buffer stock for employment is the unemployment benefit. But that if that goes up, then the government deficit goes up.
Right.
And if tax receipts drop off because you've just crushed a whole lot of poor people who are cutting back their spending, and so tax receipts drop, then the government deficit goes up. There's nothing to do with generating the real output. The deficit doesn't generate the real output. It's an accounting residual at the end of the year. Now, government spending, each dollar that government spends on some sort of service that provides infrastructure for the economy, that's what generates the output. That's what generates the real output, the GDP.
Right.
So
people just understood
to kind of play devil's advocate from his perspective, right? I think what he's trying to say, ultimately what he was trying to get at with the question when we were discussing it was this idea, which I have his tweet up next, that suppose there's a community where day-to-day money is Bitcoin and CPAs do balance sheets, profits and losses in Bitcoin. When miners get awarded a new coin, how does it show up in the accounting, right? So I think there's people like myself running around saying, look, if the government doesn't print money, then we're going to end up in a recession, right? That we need a government deficit. Otherwise, without a government deficit, we're not going to get the necessary growth. So I think he's then saying, okay, then if that's the case, where did the world as a whole, right? If you continue to push the sectoral balance argument, where did the world as a whole get its growth from, right? If it required a deficit somewhere, where did it get? What Martian country supplied the deficit? So
that's the issue, though. The issue.
Hold on. Going back though, then to kind of, and at least from his perspective, I would want to. I think he would want to say, with the government spending creating growth, is he would say something to the effect of, yeah, but that's taking real resources out of the hands of the private sector, which would always be better at properly allocating those resources to the desires of the private sector, and the government sector is going to misallocate those resources or something. I think something to that effect would be his argument, right? Is that the government would inevitably build a bridge to nowhere, whereas the private sector isn't going to do that because the profit motive isn't there to build a bridge to nowhere.
I mean, that's an incredibly dumb argument.
It's a classic
that he makes there.
I mean, I know why it's a dumb argument, but
I mean, it's just crazy. Like, are you telling me that like all of the big government programs we did with Lincoln and FDR and even Eisenhower, like that didn't ostensibly increase the capital stock of the United States? I mean, it's insane. And
it's government picking winners and losers, It's that sort of argument.
Right.
But that's what you want in a democracy. You don't want a whole bunch of wealthy oligarchs picking winners and losers and choosing where to invest. You want your democracy to do it. So the problem is.
But what is a more democratic way of doing it than allowing people to vote with their dollars?
Well, that's the first step in a democracy. Exactly. But yeah, that's a good way to do it, isn't it?
Well, people voting with their dollars. That's that.
Oh, sorry, I got it wrong. Yeah, you're right. I meant the other way around. Sorry, I didn't realize you made a joke there.
I'm still playing devil's advocate. I'll tell you when I'm no longer Bob Murphy anymore.
Yeah.
Well,
sorry.
You know what I love is like there's some infographic thing that's like there's about 10 companies that sell all the food to the grocery stores in the United States.
Okay.
So my thing is like, yeah, you've got the freedom to choose whatever those companies want to sell you. You have the freedom to buy whatever those companies want to sell you. Right? Like that's the way to think about it. So voting with your dollars, it's like, okay, but the actual things that are for sale, that has a lot to do with public policies and decisions that are made that you don't have any control over. So it's just a completely erroneous kind of view, in my opinion.
Totally agree.
So one thought
thing is though. Go ahead.
All you, Bijou.
Well, I was just going to say that it's. I think he's conflating that idea of the misallocation of resources, which may or may not be true. If you've got a really corrupt government, then obviously I think you could make a case that they're misallocating.
Yeah.
But if you have more of a democracy, you have a chance at least of making government spending a little bit fairer and more democratic and more supportive of the entire economy. Everyone benefits, even if this is the point that a lot of libertarians and that this kind of, don't think about. Maybe, I'm not sure, but if you benefit everyone by benefiting one poor person, right? So if you raise someone up out of poverty, if you provide universal health care, if you provide decent quality state housing, public housing, and if you provide all that infrastructure, you could say, well, yeah, but I'm well off. Okay, I own my own business. I'm getting income. It doesn't benefit me. That's again a fallacy of competition. It's such a terribly bad.
I know
argument.
it's so bad.
All right,
You
we
raise
got
up
the answer. I got the answer I was looking for. I think. Yeah. I got the answer I was looking for. First though, Ty, man, thanks for the $5 or $5 Canadian super chat, man. I appreciate it. Yeah, for my deep friendship. When I take him out on a date sometime, I'll be able to buy his drinks. Ghost on the half shell. Yeah, this is my. I think this is the right answer to the idea of misallocation of resources. It's a survivorship bias, right? Does the government sometimes build bridges to nowhere, the complete waste of resources? Yeah, all the time. But they never go out of business, right? So we always know the products that the government did bad, right? They will always be in our face when the government messes up. But
good point. Yeah.
But
all the mess ups from the private.
But all the mess ups from the private sector just get swiped away, right? None of us have a Microsoft Zune sitting around anymore, right? Exactly. It was a shit product. No one wanted it, right? No one.
Whole lot of shit.
Right. I mean, there is a the private.
How about Web3 and NFTs?
Yes. There is just a there is a.
That might be all time dumbest thing.
Yes, there is. I mean. The gains,
misallocation of resources.
MySpace, GeoCities, AOL. I mean, Palm Pilots. I mean, the list goes on in our lifetime of just massive companies that made products that we don't even touch anymore. And capitalism is built on the graveyard of everything that lost that we forget about.
Exactly.
That we forget about. Capitalism.
And it's tremendously wasteful when you think about it.
And
there's slower development. Where people are actually thinking really hard about what to develop a really good product and designing it, can only really be done not for profit, right?
Yeah.
If you're hanging around waiting for something to be perfectly well designed, you can't be doing it for profit. Good point, Douglas.
Let me just wrap up the point real quick. My last point in this is there's no reason to believe once you understand that you're dealing with financial assets, right? Not real resources as money. Once you can pull those apart mentally, all of a sudden you realize that the only difference between voting with your dollar in the free market and actually just voting at a poll to get some sort of, public sector resource developed, the only difference is the mechanism of vote. The likelihood that either of those end up being a wasted resource is the same. Right?
Pretty much.
We don't know. We don't know if it's a bridge to nowhere or if it's a Microsoft Zune until the market decides if they want to use it or not.
Dude, you didn't listen to what I just said.
That is my final point. Go ahead. I didn't. No,
it's not the same in both cases. Like I said, the profit motive is a terrible motive.
You're
gonna get a lot more crap from that.
I don't disagree. I'm just saying there's no reason to believe. giving the benefit of the doubt to like the free marketers, there's no reason to believe that the free market has any advantage over the proper allocation of resources. Now, if money really was gold, right, then I mean that you could come up with an argument that maybe you'd have some sort of misallocation of resources that might happen more by a government than not. I mean, maybe the dynamics change, but that's not what we have. We have a system of IOUs. Anyway, Ryan, I cut you off. I want to let you get in on your point.
Oh yeah, no problem. I was kind of tough on Matt Stoller before, but he wrote some piece a little while back, and it resonated with me. He basically made the case that he was explaining why Lena Khan, the new head of the FTC, was going after these these right to repair laws.
Yeah, that was a good piece.
And he characterized Americans historically as kind of tinkerers, right? People who love to just go into their they do a hard day's work, and then they spend their evening kind of tinkering away at something, trying to solve a problem, trying to iterate, trying to create something new, and that there's this long sort of tradition of that in America. And when you think about it, there really is something to that. Wouldn't we all be better off if we did our day job, and then had free time to be creative and to go iterate and tinker with stuff, and
Absolutely.
right? It just seemed like that just it just seems so obvious.
Yeah, that's a great point. I'll tell you what. There's one other thing wrapping up that Murphy discussion point, is that he's also conflating or confusing or whatever it is, two different things. So what we just discussed about, I think is a really good point to make about this whole myth about misallocating resources. Now, I think that's a great point. I think you nailed it there. But the other thing is that the government deficit, is not what is. It's my point earlier. I made is the government deficit is not generating anything. It's a residual.
It's a residual,
Yep.
right?
So don't go out MMT saying, "Oh, we need a government deficit."
Correct.
No, we don't.
Correct.
No, we don't. If you've got huge oil exports like Norway, or hopefully in the future it won't be oil, right? It'll be something else.
Bijou, that's a great point.
But then you're going to have a lot of revenues. The government can't help but run a surplus. It's like, we didn't want to run a surplus. We're MMT aware. We don't want to run a deficit. It's like, no, stop the surplus. It's terrible. It's sucking money out of our private sector. But there's the rest of the world sector as well. And you just don't know what the deficit is going to be. So when you're doing MMT debates, don't use that argument. It's a terrible argument because people could pick it apart. It's the government spending and the way that the government spends that takes real resources out of the so-called private sector into the public sector. That's what you want to focus on. Is that a good thing or is it a bad thing? Is it misallocating resources or is it allocating resources for a greater public purpose?
Yep.
And is it helping the member of your family being here the metaphor for your nation, is it helping that poor member of your family who's not doing so well? Do you just want to leave them dying in the gutter, or whatever, slacking away watching TV all day, not contributing to any quote unquote household chores, like helping the next door neighbor, like providing Meals on Wheels services, like doing some sort of community permaculture gardening, or using an app like we discussed the other week, Be My Eyes for the disabled. You want them to do something contributing. So if they're down, if they're feeling down, if they're sick or ill or depressed, you want to help them up because it helps the whole family. It doesn't help the family if you've got one person in the family who's really depressed and sick and down. That affects the rest of the family. I think Grumbine pointed this out earlier somewhere. He showed me this someone had snapped a cell phone picture of some homeless person just living. They were in a sleeping bag, right next to an ATM machine. Wonder why that's where they chose to sleep, on the harsh concrete. Right? It's like,
right.
Like you're doing this to your people in America, and there's no reason for it. There's no reason to have that, and it only benefits everyone if the whole society, even though you don't see the benefit yourself, you've got to think a little bit broader. You've got to expand your sort of circle of empathy or sphere of empathy, or whatever they say, because it saves society so much in the long run. So many real resources don't have to be used to take care of all of these pathologies involved with unemployment and poverty. If you put the investment in now, if the government spending is allocated to provide decent basic public health care for everyone, and decent public housing and a guaranteed job, then you're eliminating just a huge amount of waste and future costs
Huge amount of waste
in order to provide all the welfare after the fact. You've just crippled people, by not providing, and then you have to pay for it double, triple, many times over in terms of social costs. Now the government can always pay those social costs in the future, as we know. It's like no problem for the government to issue those welfare benefits. But it's going to maybe affect the price level a little bit, but also B, it's like what have you done to your people? What are you doing to them? You're crippling them, and then you're fixing them after the fact. When in first, you could have prevented that. You just could have prevented all of that terrible waste down the line. And so don't talk about the government deficit like being what's providing all that. It's the government spending that does it, and you want to make sure that the spending is a good use of the spending, not just welfare to take care of people who are now like homeless, sick, destitute, but it's actually building up the infrastructure and real resources and providing a decent job guarantee for everyone and a decent healthcare that will prevent all of that in the future. Not all of it, you can't prevent all kind of catastrophe in people's lives. People do stupid things, but you can prevent so much of it that the real savings, not the currency saving, but the real savings in terms of society's effort that you need to put into, fixing up your damaged people, all that cost kind of goes away. And so instead of having people involved in community care, they can take care of the elderly a little bit better. You can allocate resources so that you're taking care of your elderly instead of having to take care of all these damaged, healthy, but otherwise would be easily socially productive, sort of middle-aged people who are just damaged from all your past activity. And so that's the story I think that MMT has got to tell.
Bijou, that was beautifully stated.
Yeah, thanks, man.
Ryan, I don't know if you got to get going or not, but you let me know. But if you got,
I've got to get going soon.
Okay.
I could do one more Twitter if you.
All right. I like this. I like this idea of like MMT framing, right? Because I think it's very easy to get lazy in our language because we know what it is that we're talking about, right? So number one is the whole deficit thing, right? Like, we're just talking about it. We know exactly what we mean. If the government spends more, fiscal flows, whatever that is, right? But that can be very misleading. The next one that came up that is probably worth talking about, and I think the man himself is here. This idea that the taxes get destroyed. They are literally deleted when they come back in, and I thought this is a pretty. This is a pretty helpful discussion that Ty brought up about being precise in our language and what the implications. I don't know if you guys watched the video that he had along with this. So maybe you're not going to have any opinion whatsoever on this. But I think it's really important to differentiate the difference between how the U.S. system actually works, that when it spends, if there's no financial assets on the balance sheet to begin with, that if it spends, it needs to create the reserves. The reserves then get used to ultimately purchase the necessary the necessary bonds to allow the issuance of money out of the TGA to begin with, and then you can finally get the net financial assets on the books of the private sector to allow the government to provision itself. And that when taxes are then paid, assuming like it's the company that bought whatever the government wanted, or the company that received the payment for whatever the government wanted, when they have to pay their taxes, that it would come from that tax money then ends up actually staying in the TGA, so it stays on the balance sheet, the continued balance sheet of the at this point the public sector, to ultimately then be spent again. And I think
I would push back a little bit on that though. Well, if you really want to be nuanced, the digits, electronic digits in the TGA account or the government's account when taxes get paid are information. and they're not much of a real resource. It's not a resource. It's not like you got money in the bank. Or anything.
Correct.
It's just information.
Correct.
It's an accounting record. And so you could say it got deleted. It does get deleted from people's pockets because for people who are not.
Oh no, he's not.
issuers,
No. He's not saying they're not deleted from their pockets. He agrees.
I know that's what he's saying.
No,
Yeah,
he's saying that
no.
they get deleted from the balance sheets.
Absolutely get deleted.
Yeah, they get. That's right. So,
No, but I actually agree with Ty. They don't get deleted. They get
They get deleted. They get deleted.
No, this is
No, this is actually important. It's a distinct. It's a distinct liability, at least in the U.S. It's a distinct
when you're not a currency
liability on the Fed's balance sheet. There's reserves and there's a TGA balance. Can we call them TJs? Is that what we think about that? Just for sake of ease. Do you like TJs?
Yeah.
Right? TJs. Okay. So the Fed has reserves in TJs, and when taxes get paid, the reserves get debited, and it credits TJs, and when it goes the other way around, the Fed debits TJs and credits reserves.
Okay.
Those reserves that is new money. That is the Fed, and there's important legal distinctions here. That is the Fed actually creating new money. And I just want to also just point out that this is something that Mosler really sort of makes clear, is that in the first instance, right, if the banks are buying treasury notes or something, right, so the Fed credits the TGA, that creates a debit balance in banks' reserve accounts at the Fed, just by virtue of accounting, okay, and that is functionally a loan from the Fed to the banks, and it's secured by the treasury that they purchased, that they can just repo in order to get the reserve, and then they're no longer they no longer have a debit balance. They have an account balance of zero, which that's where reserve requirements are today, is 0%. So by virtue of the Fed imposing reserve requirements on the banks, that's what creates a demand for the reserves, right? Because if they are deficient, they run an overdraft, then they get charged a penalty rate. So they don't like to do that, and so that's in the first instance. That's how the money gets into the TGA.
Yep. So I have no disagreement there yet. Yeah.
And so yeah. So that's sorry if I went a little off the rails.
No, that's fine. That's fine.
But I do think because I think it's helpful to be cognizant of that sort of debit and credit relationship, because if you just kind of mentally, when you talk about things just sort of in terms of flows, like, oh, it flows into this account, it flows out of that account, and I'm as guilty of this as anyone, but when you start talking about it like that, it makes it seem like the dollars have this sort of
metaphysical
right.
Yeah,
that's their actual physical dollars, and they actually
the
might
be
moving.
Gold metaphor all over again.
Exactly, and that is where, like, you can just kind of get tripped up sometimes.
Yes.
And so I do think it's actually a good practice to, as best we can. Obviously, communications is tough, and you're trying to expedite stuff, but as best we can, try to be precise on these types of things, because it paints a different picture in people's mind when you say, oh yeah, you debit this account, credit that account, versus the funds are flowing back and forth.
Okay, let's get some terms defined. Let's get some. Okay, a debit is when there's incoming money, and a credit is outgoing.
Well,
No, that's a flow
no,
metaphor. Bad.
No.
A
What?
debit
Okay.
is your number gets changed down. That's all it is.
Well, it depends on what.
On which side of the
It
balance
depend-
sheet,
it,
right?
It depends on what perspective. If I'm an
Yeah.
accountant, if I'm
Yes.
an accountant keeping the books and records
Yes.
for my business.
Yeah, from
right?
whose perspective? I mean, that's what I'm saying. Relative
Yeah.
to which
Yeah.
side of the balance sheet it's on.
Right. So if
Okay,
I
okay.
say if I
So
say,
I was not wrong. I was just
Correct. Yeah.
correct. Okay. Well, you
Yeah,
guys both
it's
said no.
confusing.
Careful language with the flow coming in. It's the incoming is the wrong metaphor.
Okay, so it's being debited up relative to which side of the balance sheet?
Yeah.
Well,
So
if it's the Fed booking a debit, right? So think about it like this: both reserves and TJs are liabilities on the Fed's balance sheet. So if you debit a liability, that means the number goes down. If you credit a liability, it means the number goes up. That's the way to
Correct.
think about it.
Yep. Okay.
And-
Okay. Yeah. That's at least my
It's the
understanding. So
opposite on the asset
I'd say it's
side,
opposite on the asset. Okay. So incoming and outgoing was not the verb you were looking for.
yeah, because we're being nuanced here.
Okay.
We're
Okay.
getting really into the language here
Okay.
for purposes of our edification.
Okay. So
It-
so my question then is to get back to the what I'm ultimately trying to get at here is to differentiate what you mean by the reserve and what you're calling the TGA. So it sounds to me like if I pay a tax to the federal government, I think Ty's point would be that ends up in the TGA. That tax ends up in the TGA.
The record of it, the accounting record.
As an asset, correct. The accounting record of that shows up in the TGA.
Yeah.
Yeah.
Uh,
That's a language people use because they still think governments.
No, I
aren't
don't think he's.
current
I mean,
issuers.
no, I don't think he's. I don't think Ty. I don't think Ty is making that mistake. I don't think he's thinking that something is being physically put from one account into the next. I think he's saying the accounting record of it still shows up and is not deleted off the balance sheet.
Yeah. In a sense, but it's an
Well-
accounting record. But here's the way to think about it: is that the currency is a monopoly. The government issues it. It's a tax credit, an IOU of the government. When taxes are paid, the tax obligation is a redemption operation, and so your obligation or your liability gets extinguished. So when you issue an IOU, okay, that's correct. That's debiting. It's regarded as a sort of liability on your side because you're the issuer. You have to accept it back. That's a liability, and for whatever you're promising to accept it back for.
Yep.
And whoever accepts your IOU has a credit. Okay. Now, when the tax gets paid, it extinguishes. It is a kind of a cancellation operation. The debt has been repaid. All the books go back to zero. Now, you could also keep a record of how many of your IOUs you've returned back. But what does that matter? It's like the TGA doesn't have to exist. It's just a record for people to keep track of how many of your IOUs you've accepted back, so that you can maybe count how many IOUs are outstanding. Because after all, if you decide in the future or later to promise to redeem for gold or water bottles or whatever, then you're on the hook for providing gold or water or pizza or whatever it is you're promising to redeem for. But why would you do that? The only point is that you're promising to extinguish someone's tax liability. So that gets extinguished, the tax gets paid, the debt or the obligation of the government is then extinguished. You've made good on your promise to accept back your own IOU. And people still find it to this day hard to get that in their heads. Like, why is this all happening? It's like, well, it's the
Right.
money story. It's Moses' money story. Why is the government issuing these IOUs? It's in order to create a demand for them. It's coercive, and I think that's what the Bob Murphy didn't get right. There's a classic moment in that debate where he says, "Well, what's to stop me from issuing my IOU? Why can't I create money?" That whole little discussion that they had, and then Warren's like, "Yeah, well, yeah, but if you try to create US dollars, that's counterfeit." So it's like you can see Murphy kind of trying to. It almost clicked there, but he was like stunned for a second. It's like, oh. Yeah, he sort of had no comeback for that. It was like, and then he was just like, so Moses, just to be clear, everyone, Moses is saying it's theft. He's saying it's theft. He's admitting it. Like, oh my God. It's like, that's where that kind of discussion can end if you don't just accept that. Well, you don't realize that the TGA is just that accounting record. It's like you don't need to keep that record if you don't want to. It may be useful to have that record. But when the tax gets paid, it's a redemption operation. The debt is repaid. The obligation is, that whole record, that whole transaction is now sort of extinguished. So, I don't know. Do you want to add anything to that, Ryan, or didn't?
Well, one thing I would. Well, first of all, that was very well said. There's implications for monetary policy, right? These distinct liabilities on the Fed's balance sheet, serve different functions, and so I think it's important to recognize that, the reserve gets deleted, it's canceled. That is now taken out of the reserve, the balance of reserves has changed, has gone down, and that's I think that's
bingo, and I think
really important.
I think that's really what Ty's point was, is that the tax isn't being deleted in the sense that it's being, money destroyed. It's that, and this is ultimately the point that I made when I finally chimed in here, wherever I finally chimed in. I don't know when I finally chimed in. I thought I chimed in at some point. But when I finally chimed in, I said it's important to realize, though, that granted, the tax is still showing up on the TGA balance sheet. That I'm not so it's not perfectly accurate to say taxes are literally deleted in that sense, because the accounting record still shows up. But it's important to realize that now financial assets have been removed from the private sector.
Yes,
that has been deleted. And I think that is the most important point in all of this, of the effect of taxes, because right. And so that's why I like the way Ty framed it, because I think the framing, if we're going to talk in monetary terms, should be framed monetarily. Now, again, just kind of like we were talking about government spending and whatnot, amongst friends, we know exactly what we're talking about, and we have the same framework, so we don't have to be precise with it. But when I say, when I say something like taxes are bad for the economy or something, you know what I'm saying, bad for growth, you can easily understand that to mean something the way like a neoclassical would understand it, right? That I'm extracting wealth out of the private sector to pay for government spending, when what I mean is you are decreasing net financial assets, which have knock-on effects to the rest of the private to the rest of the private sector.
The point, right? You got to also, you can't. It's really hard to do that story and talk about it like tax is a deletion of currency. I agree, that's too loose a language. Really, it should really just be inside sort of discussion with someone that well, not with the general public. So what you'd say though is that a tax payment debits reserves, and it debits someone's deposit account, usually if they're not paying in cash, right? So that's what you say. It debits reserves, it debits the deposits at someone's bank. Now that creates a demand for those reserves. It creates, you've just debited someone's account. Okay, so then they need to get money to put it restore their account to whatever health they desire.
Right.
So that
right.
allows the government. It doesn't fund the government. It allows the government to spend without causing any inflation pressure.
Right.
That's the
Right.
story.
Because it's just
It's a vacuum. You just created a vacuum.
Yeah. One
So
last
Ty, I think I just got them to agree with you.
One last thing I just want to say, going back to the Bob Murphy thing, is I think he's, his whole Mars thing, whatever, I think he's still missing the money story.
100%.
And
100%.
that the tax comes first. That the government imposing a tax liability. And actually, I retweeted a tweet from Clint Bollinger, who, I hope I said his name right. I think he's a professor somewhere in Texas, I think. It's like an MMT guy. Wrote like a fun short little book on MMT. I think it's called like 1,000 Castaways or something. I forget what it's called. It's kind of this island theme. Yeah.
1,000 Castaways. Yeah. That's a good little book. It's a great little book.
Oh, it's great. Yeah, it's
Anthropology.
fun. Summer read. It's beach read. So he seems like a nice fellow, just based on Twitter interactions. And I retweeted a tweet of his. He was going back and forth with some other economist guy, and he said, we impose the liabilities on ourselves. And I was like, this is great framing, right? It's not about, because and Mosler's been criticized for, this sort of, like you're thinking you're like this colonialist, talking about like imposing this coercive tax, blah blah blah. But in a democratic society, we impose the tax liabilities on ourselves, right? Because we live in a democracy.
Yeah.
And I think, number one, that's really, really important framing. Yeah. So yeah, definitely check out this book. It's great. Anyone's looking for, late summer read, hang out at the beach.
It's up on the screen right now, just so everyone can see it. 1,000 Castaways, Fundamentals of Economics by Clint Ballinger.
Yeah. But I think getting back to the Bob Murphy thing is he's missing this idea that the tax liability comes first, and that creates demand for the currency, and that
100%. Yep.
People now 100%. Have to work to get that currency. So when you think about starting an economy from scratch and getting people to work, getting people to build schools and courthouses and hospitals and all sort of stuff, it has to that's the way that it starts. And so sure, I mean, if the Martians imposed a tax on us in Mars dollars, and they were the monopolists of that currency, then we would have to do whatever the work that was required to pay that tax. Now, obviously, that's
we'd be working
pure,
for Martian
pure fantasy,
purpose.
right? Right. But yeah, the Martian public purpose, exactly. So,
the funny thing is the neoclassicals would actually say we're getting the better end of the deal because we're exporting all of our goods and services to the Martians and the Mars. Yeah. But we're the ones that are not. You're the ones that are actually benefiting from it. Right. But look, you guys are all working. You're fully employed.
We're sending all of our stuff from Earth to Mars, and we're the ones benefiting.
We're the ones benefiting from it. Yeah.
We have
but it doesn't even. But my clothes don't even fit the Martians.
Yeah, man.
That was exactly what finally hit me as I kind of thought about this, because I think he asked a question similar to this in the podcast. What kind of finally hit me is one of the things that hit me, and I think it's just so intuitive to us as MMTers, is that money, first and foremost, is an IOU, right? And, from the standpoint of the government and the tax relationship, to the currency user in that government system, in that country system, it's an IOU. And so one of the follow-up, I think what he was really trying to get at is, okay, is there a way to have an expanding money supply, such as I have the Bitcoin tweet that he had up, right? Is there a way to get an expanding money supply without needing a deficit, right? And so he asked this question, okay, if everything is settled in Bitcoin, if money is Bitcoin, how does this look on a balance sheet? And my point is, you don't have money yet. Now, I know to him, money's primary purpose, and I don't disagree, this has to be a function of money as we describe it, is to be a settlement for exchange. I don't disagree, but you still don't have money here yet. You just have infinite barter. Money is going to happen the minute you say, okay, I owe you. That's when money comes into existence. And then all of a sudden, you actually, because I said, you're not even going to have CPAs in this situation, right? It's just, everything's just going to be settled. The monetary concepts, I mean, you might end up having CPAs. I'm sure there will be bookkeepers. But the monetary concepts that we understand of assets, liabilities, those all come about because we have an IOU system, which is fundamentally money. And you can see that this is, I mean, and this really is the difference. This is the absolute difference here, is that we first and foremost see money as an IOU, and then the minute you get an IOU in there, right? So I went back and forth with him on this, and I'm like, okay, well, can I lend out my Bitcoin, right? Getting over the fact, why the hell does everyone use Bitcoin, right? I mean, how is this being imposed? Why aren't there an infinite amount of ways to settle things in a purely, not Austrian, but anarchic society? How does Bitcoin become the dominant factor? God only knows, without it, being some sort of tax imposed situation. But once you get past that, if I am allowed to lend you a Bitcoin, or even better yet, if I'm allowed to deposit a Bitcoin, and then that bank somehow has a charter to create Bitcoin notes, right? Some sort of claim on an eventual Bitcoin, endogenously create. Yeah, then you have a real money supply that can grow. Then you have an economy that can grow. Then you can have, what we would see as a monetary economy expand. 100% agree, and it could be Bitcoin, right? Quote unquote backs the system. But, and this is going all the way full circle to where we were at this at the outset of the show, talking about kind of the endogenous cycle, it would just be it would be a wild ride. I mean, it would be a roller coaster. It would be up and down until the entire thing busted, because that is how endogenous cycles inevitably end, and that is why. Also bringing it full circle, Colin Roche, if you're still listening, this is why you need someone in perpetual deficit if you're going to have a capitalist, free market, free enterprise system that is built upon this IOU money system. You have to have it
Roche,
to ensure.
It doesn't have to be the government that's in deficit. The government
deficit's correct. It could be the rest of the world, but there's got to be a deficit somewhere.
Dude, this is good.
Yeah, so that was kind of the big point that I wanted to tie.
I got something to add to it.
I
got something to add.
Add away.
Before Ryan goes. Okay, so the point about it is you're right, and hopefully Bob will, twig onto this eventually. But it's like the Bitcoin can become the currency. Now the thing is, it becomes a currency once there's a promise to redeem it. It's not a currency now because no one promises to redeem a Bitcoin for anything. So it doesn't, and the point is okay, why would you go to all this effort to generate these Bitcoins, these basic certificates that chew up a lot of computer power and electricity and everything, when instead you could have, so the seigniorage for Bitcoin is pretty severe costs, right? So it's better to just issue a fiat currency, which is zero cost to produce, but extremely hard to counterfeit. That's the whole point of the fiat currency. It lowers the cost to society of producing the currency. You just have secure systems where you can credit accounts. You don't even have to mint coins anymore. Now, the thing about that is that the tax is what backs a fiat currency is the promise to accept the currency back in payment of taxes.
Yeah,
it doesn't have to be a tax. So if you are a monopolist of water, an absolute monopolist of water, you could use water to drive your currency. But how? You promise to redeem. You issue your IOU, and anyone giving it back to you gets a bottle of water. And how long do you think that's going to last? It's not going to last very long because you're promising a real resource instead of a tax redemption.
It's a good
So it
point.
just works a whole lot better if it's a system of democracy, a system of trust, where yes, it's imposed by force. It's kind of like using a parental metaphor, the government as the parent of the family kind of thing. I don't like those metaphors, but it's a good one in this case, right? So you've got a family, the parent needs some chores done. So they issue an IOU and they've got a promise to redeem it. Otherwise, there's no source of the price level. So the problem, like you said, it's why it goes a bit Wild West. If there's no promise to redeem, that's the problem. That's where you lose control of the price level. It's just going to go all over the place.
Yeah, which is exactly why hyperinflation hits in when all of a sudden that the tax liability or the tax credit is no longer useless to pay off the tax liability. Yeah, you're going to get hyperinflation because no one wants it anymore, and the government's just going to print it into oblivion.
I know this wasn't your topic with Bob, but it's a good topic to do a follow up on. Because you were looking at mainly at interest rate effects and endogenous cycle. But
yes,
okay. But last thing is 1,000 Castaways. 1,000 Castaways by Clint Ballinger, really good book, and that's where I first got the idea. I don't think it was from Warren or Randy Ray. It was from Clint. It sort of twigged to me. Actually, it was from Alfred Mitchell Innes. It's really where I got this from. But it was all those guys together. I realized that, the point of Ballinger's book, why is it 1,000? Why 1,000 castaways? It's because 1,000 castaways, because at about 1,000 people or below 1,000 people, the money, this is the point I keep making, the money is in your head. It's in your head. It's like who owes who what. That's what drives the currency. Someone does you a favor, you owe them now. You owe them back some work. And why are you going to repay them? Doing some favors for them or doing some work for them? Because it's in your head. You got the currency in your head. It's an accounting record that doesn't exist on anyone's balance sheet except in your brain. And you go much above 1,000 people, you lose track of who you owe. You also want to do work for someone in return for something who you don't have a personal relationship with. And you may only see them once in your whole life. So, that's when you need money. That's when the accounting records jump out of your head onto a piece of paper or someone's spreadsheet or someone's tally sticks or whatever system you use to make sure they're just hard to defraud, hard to counterfeit. And that's when you get what's called, real currency. But before that, in a small society, in a family, we don't issue IOUs. We just get chores done, but it's still a currency. If I'm constantly taking out the garbage, cleaning the dishes, vacuuming the house, doing more than my fair share of work, everyone else in the family will recognize it. Or hopefully, maybe it doesn't always perfectly work out. Maybe we should use a Smith currency. Then it would all be a little bit more above board. But in a trusted small society, less than 1,000 people, you can kind of run your currency just as records of obligations people owe each other, credits and debits in people's head. And that's where the 1,000 castaways comes from.
We had two questions come in, or one question, and then I had another question from earlier that I still want to get to. Ryan, if you got to get taken off, that's fine. We will bid you farewell. If not, we can get to the question that Jesus had. And he asked, are you saying the interest earned from banks is then making profit from future government debt? And I think he's referencing what you were getting at just a second, Bijou, I think. You were getting close to that. Jesus,
where's the question?
It's
Interesting. Oh yeah, interesting from banks is then making profit from future.
Hey guys, I
you gotta take off.
Hop.
Not a problem, man.
Okay,
hey,
Ryan.
thanks for jumping on tonight. Always great. And
this is a lot of fun.
We will we'll talk soon, man. We'll talk soon.
Okay. All right. Sounds good.
Take care.
Later, guys.
Take care. Bye. Yeah, I'm not sure.
Bijou, can you share your screen?
Oh, sorry.
No. It's because he popped off. hopped off. And when you share your screen, so you guys know the way, yeah, it doesn't matter. The way that I do it is in OBS, and then perfectly aligned when he's sharing it. Yeah. I'm glad Ryan can join. He quite literally has the numbers, so he's allowed to jump in at any time. To answer your question, though, Jesus, I don't know who you were referencing. Banks don't need. Maybe it was me that was referencing it. Oh, maybe you were referencing my little spiel. Banks do not need government debt to ultimately earn a profit on their interest. That's one of the things that Steve Keen has demonstrated in his Minsky models, is that you can have a purely endogenous system, allow the currency to circulate fast enough. Banks will continue to make their interest payment as long as the stars align. We'll earn the interest payment as long as the stars align without the government necessarily needing to spend. So I hope that answers your question.
Banks operate on a spread, on a rate. On a spread, on the spread is how Warren puts it, or most bankers put it. So they don't care really what the interest rate is, and they don't need to have treasuries. Currently, in many countries, governments are paying interest on reserves. So the banks don't ever run short of reserves these days. And central bank will always supply the reserves, as we know, and so whatever the rate is that the central bank charges, if a bank does need to get more reserves at the end of the accounting period, the interest rate is the cost of those funds. But whatever it is, it just means that the bank is going to charge a slightly higher rate on their loans. What is it? I think they always go about 3 or 5% or something.
3-4%. Yeah. Because when interest rates are at zero, mortgages were at 3.5%, 4%. I think what Jesus is, they don't have the emoji button. Are you talking about the little heart thing that goes pew 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 pew? I've still got it. I think Jesus is asking how do banks how do banks ever make a profit if they lend out money? Where does their interest profit ever come from?
Right.
And it's still there for me, Ty. Sorry, man.
So Randy Ray goes through this. It always requires a third party, right? So you can't have a perfect circuit in an endogenous money system. So the bank ultimately they won't be able to settle payments with their own IOU. They need some other third party's IOU to settle final payments.
Yeah, I don't think that's what Jesus is trying to get at, but this is also a good point too. That's just a point. The sort of background point is that as long as money is circulating, right? As long as everyone's spending all their income, eventually the interest, can get paid. But that's not a very sort of stable way to do it. It's better to have an exogenous source of currency, so that you're not having to, use a third party's, currency. Well, but that's kind of what we do with central bank. Is the third party. And so they're the source. The central bank is the source of ultimate source of those eventual profits of the banks. The next question too, and we can get wrapping up because Bijou, I know you said you had to. Yeah,
I'm getting a bit tired here.
You had to.
I can stay on. I'll stay on.
You had to roll. Like. The next question was going all the way back to a question way early on that Ghost on the Half Shell had about. Do banks really want? Let me read it perfectly here. Do banks actually want people with fat deposits in their demand accounts or savings?
Oh yeah.
Yeah, going all the way back to that. Generally speaking, banks do. The little heart button. Sorry, man. This heart thing. Ty, I'll answer that question in just a second. What's really weird, when I pull the chat up on the TV to have in the background, it doesn't have the hearts on this. So this is an anonymous YouTube account that's streaming the chat behind me, and it did not have the hearts. So it's not there. Going back to the question though, Banks generally do want deposits because it's a lot easier to sell you. We're on something more important. Please be respectful. Banks do want deposits, even large deposits, because it allows. It's kind of like a loss leader. It allows people with big deposits to get them into other financial instruments where they can make a spread, right? So if you buy a CD or something like that, in any financial instrument beyond just keeping your money on, as a deposit, they will be able to earn a spread, and that's why banks want the deposit.
But would you say banks don't really want deposits? Deposits are liabilities.
Yeah, you're right. You're right. They
want customers.
Yeah,
they want
customers. It's
right?
a very good point. That's a very good point. Yeah. No, I like the way you put that. That's a much better way of putting it. Yeah. They want the customer. They don't want their deposits. They only want their deposits because their deposits can buy shit that make them money. Yeah. Much better. I think for those of you who are in their late 30s, just like Good Charlotte said, girls don't like boys, girls like cars and money. Banks don't like deposits. Banks like financial instruments and getting you in debt. Yeah, that's what it is.
Exactly. Yeah.
Let's see.
Excellent.
That is all I have for tonight. We hit the high notes, had some fun on Twitter. I'm sure I forgot a few Twitter debates, but there are a few that I did want to hit. I think we had some fun. And Ty Keenes.
We didn't even talk about squeezes and liquidity drains and things like that.
Yeah, we never got to that.
I'll do that in the outro.
Yeah. I will tell you this. For those of you, who've made it this far,
Troopers.
It is. Did you say true believers?
Troopers.
Oh, troopers out there. Yeah.
MMT troops.
With regard to the video that I put up this week, I mean, it is so easy to sell doom and gloom, and it is so tempting to sell doom and gloom, right? I mean, and I could do it effectively and still not feel like a complete fraud, right?
Oh wow, yeah.
But it's just not the right way to do it, right? I mean, here's the thing. There will be the right time to sell doom and gloom, right? I mean, if the government all of a sudden starts to run surpluses or something like that, right? I'm going to be doom and gloom.
Neoliberalism. Dude, we're in neoliberal era. This is the era of doom and gloom for our entire generation.
Yeah. But you got to obviously be, I don't know. I think you have to pick your doom and gloom appropriately. And
yes, it's to parallel currents. This is how civilization is progressing at the moment. There's a lot of progressive, positive stuff happening in society. A lot of people waking up from neoliberalism. At the same time, neoliberalism still exists, and a lot of crony capitalism still exists. And so there's also good. There's good and bad, and the news media report all the bad. So it's very easy to be doom and gloom. If you watch
and particularly when it comes to markets, right? Sky is falling, sky is falling. This thing's going to cause a crash. That thing's going to cause a crash. Stealth liquidity squeeze.
Buy that gold. Get into gold.
Yeah, buy gold. Get
into real estate. Let's pump up those house prices.
I might have went over this a week or two ago, but I pulled up gold relative to the S&P since the great financial, since QE started, November 2008, since QE started. And we have increased deficits by 20 trillion. I think I'm right in all of this. I think since QE started, we've increased deficits by 20 trillion federal debt. I'm going to pull this up.
Just while you're doing that, I just say the real estate I think is far worse. But just pumping up freaking house prices just to make rich people richer, or house owners feel like they've got some, savings in their houses is really just evil. To me, I want to get house prices right down.
Yeah,
Sorry,
the best. I mean, no. The best way. I mean, the best way to do that is 0% interest rate, with then forcing the banks to hold on to the what the hell? Forcing the banks to hold on to the loans that they make and not be able to package them and hand them off. Yeah. There we go. Okay. This is why, speaking of gold, I mean, there's just a little bit of a joke with gold here. QE started, in November of 2008, Q4, $10 trillion was the deficit. We're now above 30 trillion. So 20 trillion in increase. And QE for an entire decade. What do you think has outperformed during that decade? Gold or the S&P? Do you remember when everyone told you? Do you remember when everyone told you to buy gold because of QE and massive deficits?
Yeah.
What do you think's outperformed since? Chat, let me know. What do you think? What do you think's outperformed since QE? Since the massive printing of dollars that was QE?
This is coming from the guy who said his best trade ever was gold.
Yeah, one of my best trades ever. Yeah, it was gold. Yeah.
How funny.
Yeah. S&P has outperformed gold by over 100% since QE.
What?
And the $20 trillion worth of deficit spending since that
Hey,
time. Since that
any
time
day
frame.
now. Any day now.
No. Yeah, absolutely. Any day, gold will become
day.
the best investment. The best investment ever. All right, that's all I have to say. You got me on one final tangent before we take off.
Yeah.
All
right.
And why don't you, if you got something for us tonight into the close, why don't you send us off with one of your classic?
This is a bit rough. But I managed to crack out. Oh, hang on. I need to write a new one or a last one or something like that. Geez, am I going to remember it? What was it now?
You write these ahead of time. For this whole time we've been doing this, for almost a year now, I've figured you just do these purely extemporaneously. But
No, not these longer poems.
I
man.
know.
Sometimes I do the Batman ones extemporaneous. The trouble is the last verse I've got here that was like I was falling asleep and I thought of it, didn't write it down. Damn it. Shit. Oh, you caught me. Anyway, I'll go through this. Maybe I'll think of that verse. I'll do it next week or something. Okay, here's liquid. The liquid stealth drains. The liquid stealth drains poem. The liquid forsooth began to drain out of my bank, so we would fain. This is oldie English style Shakespeare. The liquid forsooth began to drain out of my bank, so we would fain hope the drain pipe could be turned straight back to butter getting churned. For economists with thoughts so quaint speak of drains, but show restraint. They warn the government's purse shall empty, but sovereign coin can ne'er be scanty. A bank doth lend, creates the gold, in ledgers full and vaults untold. Mainstream minds they cry and fret, a liquidity crisis. Yep, you bet. The king himself may call for tax, but print more coin, there's no relax. The sovereign's chest can never wane, the gold replenished time and again. So, lend and spend, ye banks so fine, your magic art is quite divine. Create the funds with just a quill, an endless spring that flows at will. Let naysayers wail, let doubters frown, their backward thoughts will not be bound. For we know truth in rhyme and jest, the liquid drains, 'tis but a test. The money's there, in endless stream, a modern marvel, an economist's dream. So, here's to those who see the light. May your bank never drain. May your coin shine bright. But hark, a stealthy plan's revealed. Liquid drain, yet well concealed. The Treasury sells its long-date bonds to banks that reach with grasping fronds. Make haste, cries the Treasury, take this debt. The banks comply, and yet, the liquid stealthy drains away. Its yellowy stuff is all I'll say. A game they play, the sly charade, a dance of numbers, a grand parade. The bonds are long, the jest is deep. The banks and treasury secrets keep. With quill and ink and ledger keen, they conjure gold, a sight unseen, a magic trick, a ruse, a jest, an old economy's merry fest. So raise your glass and toast the game of stealthy drains and banking fame, where money's made with just a glance, and governments ne'er miss their chance. In Python land, where humor's king, these fiscal tales they sing and sing, a comedy of numbers bold, of shining liquid shafts of gold. So laugh we now with hearty cheer at Fintwits who doth quake in fear. For we know well 'tis but a joke, this stealthy drain, this bond-filled poke. All right. The missing last verse will come next week when I remember.
Bravo.
The missing last verse.
Bravo. Bravo. That was awesome.
All right, guys. I hope that wasn't too banging.
Oh my God. That was great. That was great. All right, everyone. We'll see y'all next week. Have a good night, everybody.
Good night.
See ya.